Thank you, our Executive Chairman. As previously introduced, my name is Sophiean Edwards. I'm Assurance Manager with Ernst Young. Pleasant afternoon to the Chair, Executive Chair, and members of the board, and all the shareholders and everyone in attendance. So I'm here to present to you the Independent Auditor's Report. Independent Auditor's Report to the members of tTech Limited. Report on the audit of the financial statements. Opinion. We have audited the financial statements of tTech Limited, the company, which comprise a statement of financial position as at 31st December 2021. The statements of comprehensive income, changes in equity, and cash flows for the year then ended, and notes comprising the significant accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the company as at 31st December 2021 and of its financial performance and cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRS, and the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with international standards on auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We are independent of the company in accordance with the International Ethics Board, Standards Board for Accountants, ISBA, International Code of Ethics for Professional Accountants, including International Independent Standards, ISBA Code. And we have fulfilled our other ethical responsibilities in accordance with the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the financial statements for the current period. These matters were addressed in the context of our audit in the financial statements as a whole and in informing our opinion thereon, and we do not provide a separate opinion on these matters. For each matter below, or description of how our audit addressed the matter is provided in that context. We have fulfilled the responsibilities described in the auditor's responsibilities of the audit of the financial statements section of our report, including in relation to these matters. Accordingly, our audit included the performance of procedures designed to respond to our assessment of the risk of material misstatement of the financial statements. The results of our audit procedures, including procedures performed to address the matters below, provide the basis for our audit opinion on the accompanying financial statements. Key audit matter. Allowance for expected credit losses. As described in Notes 3I, 7, and 20, and in accordance with IFRS 9 financial instruments, the company applies the simplified approach for computing expected credit losses, ECLs, on trade receivables and other related assets and the general approach for debt instruments. The measurement of ECLs requires management to consider its historical credit loss experience and current business conditions adjusted for forward-looking factors such as economic indicators, which may impact a debtor's ability to pay. Where the general approach is applied, judgment is used in determining whether there has been a significant increase in credit risk and estimating the probability of default and loss given default. The ECLs being recorded are therefore considered to be highly subjective. How our audit addressed the key audit matter. Our procedures, amongst others, included the following. We evaluated the techniques and methodologies developed by the company in order to estimate the ECLs and assessed their compliance with the requirements of IFRS 9. We addressed the reasonableness of the methodologies and assumptions applied by validating the completeness of the inputs used to derive the loss rates, which are integral to the provision matrix used in determining the ECLs for trade receivables and other related assets. For financial assets classified as debt instruments, we corroborated management's assumptions with data from external sources, particularly with respect to the determination of whether there has been a significant increase in credit risk, probability of default, and loss given default rates. We also assessed the adequacy of the disclosures in the financial statements. The other key audit matter is revenue recognition under IFRS 15, revenue from contracts with customers. Note 3II, use of estimates and judgments under the section revenue recognition under IFRS 15 details management's judgments when applying the 5-step approach outlined by the standard to contracts with their customers as follows. Number 1, identify the contract or contracts with a customer. Number 2, identify the performance obligations in the contract. Number 3, determine the transaction price. Number 4, allocate the transaction price to the performance obligations in the contract. Number 5, recognize revenue when or as the entity satisfies a performance obligation. The standard also requires management to identify the performance obligation in a bundle sale of equipment and installation services to determine the timing of satisfaction of performance obligations. It also requires management to determine whether it acts as a principal or agent in executing the contracts and if there are significant financing components included in the promised payment amounts. How our audit addressed the key audit matter. We have obtained and reviewed management's assessment and understood the underlying assumptions used to support the calculations as regards IFRS 15. We also evaluated the appropriateness of the company's revenue recognition policy in comparison to the requirements of the standard. We reviewed management's computations and independently reviewed a sample of contracts and evaluated them in accordance with the 5-step approach as follows. Number 1, we obtained and reviewed established signed contracts to validate that legitimate contracts exist with customers. Number 2, we identified the relevant performance obligations as stipulated by the contracts. Number 3, we verified the transaction prices that are explicitly stated in the contracts associated with the relevant performance obligations. Number 4, we obtained and reviewed invoices on a sample basis, along with supporting reports confirming evidence of work carried out and performance obligations being met. Additionally, where bundle sales were offered, we assessed whether the transaction price should be allocated to each performance obligation. And number 5, based on the above, we verified that revenue was properly recognized in the correct period. We also assessed management's assertion that the company acts as a principal for the equipment sold as they execute control over the related assets, including warranties and software licenses purchased from third parties and resold to customers. Short-term advances received from customers were verified to determine whether any significant financing components were identified. These advances were generally settled within 1 year. We also reviewed the disclosures for appropriateness in accordance with IFRS 15. Other information included in the annual report. Management is responsible for the other information. The other information comprises of the information included in the annual report for the year then ended 31st December 2021, but does not include the financial statements and/or auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or knowledge obtained in the audit or otherwise appears to be materially misstated. Now, we did receive the annual report and reviewed it before it was actually published, right? But at the date of this auditor's report, it was not available at that time. So responsibilities of management and the board of directors for the financial statements. Management is responsible for the preparation of financial statements that give a true and fair view in accordance with IFRS and the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of the financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company or cease operations or has no realistic alternative but to do so. The board of directors is responsible for overseeing the company's financial reporting process. Auditor's responsibility for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if, individually or in the aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting, sorry, the risk of not detecting a material misstatement resulting from fraud is higher than from one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to evidence or conditions that may cast significant doubt on the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the company to cease to continue as going concern. Evaluate the overall presentation, structure, and content of the financial statements, including the disclosures, and whether the financial statements represent the underlying transactions and events in a manner that presents a true and fair view. We communicate with the board of directors regarding among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify through our audit. We also provide the board of directors with a statement that we have complied with relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and where applicable related safeguards. From the matters communicated with the board of directors, we determine those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosures about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on additional requirements of the Jamaican Companies Act. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records and the financial statements, which are in agreement therewith, give the information required by the Jamaican Companies Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is K&N Sudlow, signed Ernst Young, dated 31st, Ernst Young, Kingston, Jamaica, dated 31st of March, 2022. There ends the reading of the auditor's report. Only 6 pages. If there are any questions in relation to the audit of the numbers, you can raise those now, but if there are any questions in relation to the makeup of the numbers, then the finance manager will respond to those.